Why are you so bullish on Netflix, Justin?
Yeah, thanks, Tyler. To be clear, we were bullish before. We just got more bullish. The function there is really a couple of factors. One, we see ongoing subscriber momentum. That's a function of both the U.S. market and more traction internationally. Two, Netflix is finally starting to succeed in films. Take Bird Box. That garnered 45 million unique viewers, which is a tremendous amount of interest for a movie that probably wouldn't have gotten that much distribution at the box office. And then third point, profit margins. If you look at Netflix, the knock has been profitability has been low, free cash flow burn has been high. Management's given enough guideposts with expense reclassifications, with initial commentary toward 2019, that you can start seeing Netflix really round that curve on investment spend and generate material free cash flow, material earnings over the next 5 years.
Did you see Bird Box?
I did.
What'd you think?
I'm a poor, you don't want to know my media habits.
Because I saw it, it was, let me just say, disturbing and quirky, but be that as it may, that's one film. What about the amount of money, though, that Netflix is committed to spending on content to increase its library? That's number one. And they are doing it in part to compensate for the fact that some of their content partners are leaving the ship.
Right. To your point, Disney is removing its licensing agreement with Netflix. Obviously, Disney is a huge chunk of the box office, particularly in the wake of the Fox deal. So for Netflix, you do have to backfill some of that content library, but I would look at it this way. Disney, Fox, that's competing at the very high end of the market, the big global films like a Black Panther, like an Avengers. That's still a lot of content out there for Netflix to go out and acquire. Take Roma. That had a great showing at the Golden Globes. Netflix has helped build an audience for that.
Justin, what
so
was
I think
the point,
of it more as...
Sorry to interrupt. What was your point in the note about the relative underperformance versus traditional media? I mean, do you want to make a comparison with traditional media, or should Netflix live in its own separate peer group?
Netflix is actually a better comp against traditional media. I mean, part of my criticism of the FANG complex is that they're all very different companies, media, advertising, and e-commerce. So you need to view them against the companies they're taking share against. If you look at when Netflix has typically outperformed or underperformed, there's generally been an inverse relationship with traditional media. So if you go back to 2016, when Netflix lagged, traditional media was outperforming. Back half of 2018, traditional media outperformed as investors focused on free cash flow amid that technology rotation. Now that Netflix earnings look a little more safe, that there's more positive revision potential, you should start to see Netflix outperform again.